Hey there, I'm excited to report on the recent happenings with Tesla, a company that has been making waves in the automotive industry for quite some time. As a long-term believer in the company, I truly think that Tesla's shares are undervalued. Holding Tesla stock requires a unique blend of imagination, grit, and, most importantly, patience. But first things first, make sure you subscribe to Wall Street Games. If you haven't already, this is the perfect time to smash that subscribe button. And at the end of this video, don't forget to give it a big thumbs up. Despite the company's volatility, Tesla is likely to continue being an excellent long-term investment. Only long-term investors may truly find it easy to withstand the roller coaster experience that comes with investing in Tesla. While Tesla's sales and delivery numbers haven't always been stable, there's no doubt that interesting things are happening. The company will likely show consistent growth with its car production moving forward. Several investors and analysts have based Tesla's future on the number of cars it can deliver, and once again, analysts are predicting impressive delivery numbers for the company this year. Tesla's stock currently holds a strong buy rating from some of the best analysts in the industry. Recently, Tesla posted record quarterly vehicle deliveries, which is great news for the company. However, quarter-over-quarter sales growth was modest, despite price cuts by the company in several markets. Tesla had to cut prices for some of its cars due to rising competition and economic pressures. In late 2022, Tesla reduced the prices of its vehicles worldwide, specifically the Model 3 and Model Y in regions like Australia, France, Germany, the Netherlands, Norway, Switzerland, and the United Kingdom. This move allowed more people to purchase Tesla cars. Tesla's decision to cut prices has been backed by numerous engineering innovations that have allowed the company to reduce production costs. According to Grace Ta, Tesla's vice president for external relations in China, the company is responding to the country's call for practical actions to promote economic development and release the potential of domestic demand. This move is in line with Tesla's long-term strategy of expanding its reach in the Chinese market, which is one of the largest for electric vehicles globally. Despite the positive response from Tesla's leadership, some analysts claim that the price cuts didn't yield the expected results. While many believe these cuts would result in a massive surge in demand, it doesn't seem to have worked out as expected. However, it's important to note that the success of any price cut strategy depends on several factors: market conditions, consumer behavior, and competition. Despite the mixed reactions to Tesla's recent price cuts, the company remains committed to its mission of accelerating the world's transition to sustainable energy. With continued engineering innovations and a focus on expanding its global reach, Tesla will likely continue to be a significant player in the electric vehicle market. Let's dive into the numbers. According to Refinitiv data, Tesla delivered 422,875 vehicles in the first quarter of the year, a 4% increase from the previous quarter and 36% higher than a year ago. This first quarter delivery exceeded analyst expectations of 430,000 vehicles. Interestingly, Wall Street had expected deliveries of around 432,000, but Tesla delivered 422,875 vehicles, beating the Refinitiv estimates. In addition, Tesla delivered 6% more of its mainstay Model 3 and Model Y vehicles in the first quarter compared to the previous quarter. However, deliveries for its higher-priced Model X and Model S vehicles slumped by 38%. It's also worth noting that the carmaker produced more cars than it delivered, manufacturing 440,808 vehicles during the first 3 months of the year. Overall, Tesla is still making strides in the automotive industry and continues to innovate. Despite some challenges, the company has been ramping up production at new factories in Texas and Berlin and recovering from the lockdown hit in China. Tesla recently tweeted that its Texas factory built 4,000 Model Ys in 1 week, and its German plant is also producing 4,000 cars per week. Despite the supposed delivery misses, CFRA analyst Garrett Nelson recently upgraded Tesla's stock to a strong buy rating, with an increased price target from $250 to $275. Nelson stated that Tesla's story has a lot going for it, and he stands by his strong buy rating. On the other hand, Citigroup analyst Itai Masili said he expects a slight pullback in Tesla stock after the delivery report. Masili believes the growing spread between production and deliveries will likely keep attention on more price cuts in Q2, and Tesla shares could retreat slightly. The major concern for investors and analysts right now is Tesla's earnings report for the first quarter. In 2021, Tesla earned $53.8 billion in sales revenue, a significant increase from $31.5 billion in 2020, with a 70.64% growth. Tesla remained the largest EV manufacturer in terms of revenue and market share, followed by Volkswagen. Tesla reported its fourth quarter earnings on January 25, 2023, beating both earnings and revenue expectations. The company reported automotive revenue of $21.3 billion in the quarter, a 33% growth year-over-year. Tesla's solid quarter is a sign that it's done an outstanding job navigating through global supply chain and logistical challenges, weathering the storm better than most legacy automakers. As of today, Tesla has delivered over 4 million vehicles. However, the company still faces several near-term headwinds, including persistently high inflation, a looming economic slowdown, and the ongoing global chip shortage, as well as various supply chain issues. Despite these challenges, Tesla delivered 1,331,851 vehicles to customers worldwide in 2022, increasing deliveries by 40% compared to the previous year. Tesla also produced 47% more cars in 2022 compared to 2021. While other automakers reported their worst sales figures in a decade, Tesla's delivery numbers were praiseworthy. The big question remains, will this year be better for Tesla? In 2022, Tesla expanded its international factories, including the newly opened Giga Berlin in Germany, where the first Tesla vehicles were produced by March of that year. Elon Musk, Tesla's CEO, plans to turn Giga Berlin into a European jewel. The factory in China was also updated to manufacture up to 750,000 Model 3 and Model Y electric cars annually. During 2022, Tesla installed the capacity across all of its factories to produce 100,000 Model S and Model X vehicles per year, alongside 1.8 million Model Y and Model 3 vehicles. According to Gene Munster, managing partner at Deepwater Asset Management, Tesla stock has more downside ahead. Munster believes that investors should brace for as much as a 25% drop in future earnings due to the recent price cuts. While he's a long-term believer in Tesla and thinks the shares are undervalued, he remains cautious in the near term due to the earning pressures associated with the discounting. Speaking on Tesla's price cuts, Gene Munster said that without these cuts, things could have been much worse. Although Tesla's delivery rate showed acceleration, it didn't quite reach the level that Musk had initially suggested. However, the founder of Loop Ventures remains positive about Tesla and believes there are several good reasons to own Tesla stock in 2023. One of the biggest headwinds for Tesla has always been its valuation, but as the company surges in sales and profits, it has proven that a business can grow into a high valuation over time. At the beginning of this year, Tesla had a price-to-earnings ratio under 30, a sales ratio under 5, and a price-to-free cash flow ratio under 50. Since then, all three metrics have risen as the stock price has increased. While it's true that Tesla stock isn't as cheap as it was at the beginning of the year, its valuation is still not unreasonable if the company can continue growing at breakneck speed. However, while investing in Tesla stock right now might be a good idea, it's important to stay modest in your investment. One of the biggest mistakes an investor can make is allocating too much attention, time, and money to one stock. The bigger the position, the easier it is to make impulsive decisions when stock prices are falling with no end in sight. Therefore, the best approach for most investors could be to own a reasonable but not overly sizable position in Tesla and then let the multi-decade investment thesis play out. Do you think investors should hold on to their Tesla shares? Let us know below, and don't forget to tell us your valuation of Tesla. If you want to know more about what Tesla has been up to over the last few days, click on the next video on your screen. See you there. Thanks for tuning in. And if you enjoyed this content, Don't forget to hit that like button, subscribe, and turn on notifications to stay updated on everything happening with Tesla. Thank you.